points higher than that of the previous month. The Business Activity Expectation Index for services was 57%, 0.4 percentage points higher. Specifically, the Business Activity Index for industries like railway transportation, water transportation, air, telecommunication, broadcast, television, and satellite transmission services stayed within the high expansion range of 60% and above. 3. Market sales grew steadily and service retails grew fast. In August, the total real services of consumer goods reached 3.9668 trillion yuan, up 3.4% year-on-year, 0.17 percentage points higher month-on-month. By different areas, the retail sales of consumer goods in urban areas was 3.4387 trillion, up 3.2% year-on-year. In rural areas, we saw 528.1 billion yuan, up 4.6%. And by consumption patterns, the retail sales of goods was 3.5172 trillion yuan, up 3.6%. The income of catering was 449.6 billion yuan, up 2.1%. Sales of basic living goods and certain upgraded goods enjoyed sound growth. The retail sales of daily necessities, of grain, oil, and food, and of sports and recreational articles by large enterprises went up 7.7%, 5.8%, and 16.9% respectively. The effect of trading of consumer goods policy continued to manifest, with the retail sales of furniture, household appliances, and audiovisual equipment, and office supplies and communication equipment by large enterprises up by 18.6%, 14.3%, and 14.2% and 7.3% respectively. In the first 8 months, the total retail sales of consumer goods reached 32.3906 trillion yuan, up by 4.6% year-on-year. The online retail sales was 9.9829 trillion yuan, up by 9.6% year-on-year. Specifically, the online retail sales of physical goods was 8.0964 trillion yuan, up 6.4%, accounting for 25% of the total retail sales of consumer goods. In the first 8 months, the retail sales of services went up 5.1% year-on-year. Specifically, the retail sales of culture, sports and leisure services, tourism and consultation and rental services, and transportation grew fast. 4. Investment in fixed assets maintained growth and investment in manufacturing grew fast. In the first 8 months, the investment in fixed assets reached 32.6111 trillion yuan, excluding rural households, up 0.5% year-on-year. Investment in fixed assets was up 4.2%. Specifically, investment in infrastructure went up 2.0% year-on-year, and that in manufacturing grew by 5.1%. In real estate, development declined by 12.9%. The floor space of newly built commercial buildings sold was 573.04 million square meters, down by 4.7% year-on-year. The total sales of newly built commercial buildings was 5.5015 trillion yuan, down by 7.3%. By industry, investment in the primary industry went up 5.5% year-on-year, that in secondary industry up 7.6%, and that in tertiary industry down by 3.4%. The private investment declined by 2.3% year-on-year, or grew by 3% within the investment in real estate development deducted. Among high-tech industries, investment in information services, aerospace vehicle and equipment manufacturing, and computer and office device manufacturing grew by 34.1%, 28%, and 12.6% year-on-year. In August, the investment in fixed assets declined by 2.0% month-on-month. 5. Imports and exports of goods sustained growth and trade structure continued to optimize. In August, total value of imports and exports of goods was 3.8744 trillion yuan, an increase of 3.5% year-on-year. Specifically, the total value of exports was 2.3035 trillion yuan, up 4.8%, and the total value of import was 1.5709 trillion, up 1.7%. In the first 8 months, the total value of imports and exports of goods was 29.5696 trillion yuan, an increase of 3.5%. Specifically, the total value of exports was 17.6056, up 6.9%. Total value of imports was 11.9640 trillion yuan, down by 1.2%. In the first 8 months, the imports and exports of general trade went up 2.2%, accounting for 63.9% of the total value of imports and exports. Imports and exports with BRI countries grew 5.4%. Imports and export by private enterprises was up 7.4%, accounting for 57.1% of the total value of imports and exports, and 21 percentage points higher than the same period last year. 6. Employment was generally stable, and urban surveyed unemployment rate went up due to seasonal reasons. In the first 8 months, the urban surveyed unemployment rate averaged 5.2%. The urban surveyed unemployment rate was 5.3%, 0.1 percentage points higher than that of the previous month. This has maintained the same level as that of the last month. The surveyed unemployment rate of population with local household registration was 5.4%, and that of population with non-local household registration was 5.0%. Among which the rate of population was non-local agricultural household registration 4.7%. Urban surveyed unemployment rate in 31 major cities was 5.3%, 0.1 percentage points higher than that of the previous month. The employees of enterprises worked 48.5 hours per week on average. 7. Core CPI continued to rebound, and producer prices for industrial products witnessed a narrow decline. In August, the CPI went down 0.4% year-on-year, maintaining the same level month-on-month. By groups, prices for food, tobacco, and alcohol went down by 2.5% year-on-year, closing up 1.7%, housing up 0.1%, articles and services for daily use up 1.8%, transportation and communication down by 2.4%, education, culture and recreation up 1.0%, medical services and healthcare up 0.9%, and other articles and services up 8.6%. Among the prices for food, tobacco and alcohol, the prices for pork down 16.1%, fresh vegetable down 15.2%, fresh fruits down 3.7%, and grain down 0.8%. The core CPI, excluding food and energy, was up 0.9% year-on-year, 0.1 percentage points higher than that of the previous month. In the first 8 months, CPI went down 0.1% year-on-year. In August, the producer prices for industrial products down 2.9% year-on-year, a decline of 0.7 percentage points compared with the previous months. The purchasing prices for industrial products went down by 4.0% year-on-year, a decline narrowed by 0.5 percentage points. In the first 8 months, the producer prices for industrial products and the purchasing prices for industrial products dropped 2.9% and 3.3% respectively. Overall, in August, with the synergy of macro policies, the economy was generally stable with steady progress, and new achievements have been made in high-quality development. That said, we are also aware that there are still unstable and uncertain factors in the external environment, and our economic development is still confronted with multiple risks and challenges. For the next stage, we will follow the guidance of Xi Jinping's thought on socialism with Chinese characteristic for a new era, adhere to the general principle of pursuing progress by ensuring stability, fully apply the new development philosophy, accelerate efforts to create a new development pattern. We will fully implement macro policies, focus on keeping employment, businesses, markets, and expectations stable, deepen reform and opening up for the steady and healthy growth of the economy. Thank you. Thank you, Mr. Fu Linghui. Now the floor is open to questions. Please identify your media affiliation before raising questions. Thank you. First question, please. Thank you.
Since the beginning of this year, China's economy has demonstrated strong resilience. So, what are comments on this? Any highlights and positive changes? Thank you for your question. In August, under the strong leadership of the CPC Central Committee, local authorities and government departments implemented the decisions of the CPC Central Committee and the State Council that intensified proactive macroeconomic policies, advanced the unified national market, and strengthened the domestic economic circulation. The economy operated steadily with high-quality development, progressing solidly. There are the following features. First, production grew steadily. In agriculture, early rice outputs increased. Autumn grain planting area remained stable with a slight rise. Crop conditions were gradually normal, and livestock production stayed stable. In industry, August saw a 5.2% year-on-year increase in value-added output of large-scale enterprises. A strong growth. Manufacturing performed well with a 5.7% in value-added output, outpacing overall industrial growth. In services, the service production index rose by 5.6% year-on-year, outperforming the large-scale industries. Increased summer travel boosted the accommodation and catering industry in August, with its production index growing faster than the previous month. Second, domestic demand continued to expand. In consumption, retail sales of consumer goods rose 3.4% year-on-year, with trade-in-related goods maintaining rapid growth. Service consumption potential was further unleashed, with tourism, leisure performances, events, and information communication services thriving. From January to August, service retail sales grew 5.1% year-on-year, outpacing commodity retail growth. Investment, fixed asset investment, increased 0.5% year-on-year, with manufacturing investments rising 5.1%, significantly faster than overall investment, strongly supporting manufacturing upgrades. Third, foreign trade and reserves grew. Despite weak global economic growth and rising uncertainties in international trade, China's trading goods showed sustained resilience. In August, goods imports and exports rose 3.5% year-on-year, with both exports and imports achieving growth for the 3 consecutive months. Electromechanical product exports grew rapidly. From January to August, electromechanical product exports rose 9.2% year-on-year, with integrated circuits and automobiles rising 23.3% and 11.9% respectively. By the end of August, China's foreign exchange reserves increased by $29.9 from the previous month. Fourth, operations remained stable overall. Key production and demand indicators maintained steady growth in the first 8 months. From January to August, value-added output of large-scale enterprises, the services production index, retail sales of consumer goods, and goods import-export growth rates was broadly consistent with January to July. In employment, the urban surveyed unemployment rate in August was 5.3%, slightly up from the previous month due to the graduation season, but unchanged from the previous year. The unemployment rate for the 30 to 59 age group, the main employment demographic, remained stable, confirming sustained employment stability. In prices, the CPI in August fell 0.4% year-on-year, mainly due to declining food prices. However, the core CPI, excluding food and energy, rose 0.9% year-on-year, with the increase expanding by 0.1 percentage points from the previous month, affirming price stability. Fifth, transformation and upgrading continued. Innovation played a leading role. Artificial intelligence flourished, digital empowerment accelerated, and related industries grew rapidly. In August, value-added output of smart vehicle equipment manufacturing and electronic components and equipment manufacturing rose 17.7% and 13.1% respectively. Integrated circuit manufacturing increased 23.5%. Industrial upgrading maintained a positive trend. Equipment and high-tech manufacturing grew strongly, with value-added output of large-scale equipment manufacturing and high-tech manufacturing in August rising 8.1% and 9.3% year-on-year respectively, both significantly outpacing overall large-scale industry. Modern services performed well, with the production indices for information transmission, software and IT services and leasing and business services growing 12.1% and 7.4% in August. Green transformation progressed steadily, with August production of new energy vehicles and lithium batteries for vehicles increasing 22.7% and 44.2% respectively. Trade diversification showed results, with January to August imports and exports to BRI participating countries growing 5.4%, faster than overall trade growth. Overall, the economy in August performed steadily, with high-quality development advancing solidly. But challenges remain. The external environment is complex and severe, with numerous unstable and uncertain factors. Domestic demand is weak relative to strong supply, and some enterprises face operational difficulties. Going forward, we will fully implement the decisions of the CPC Central Committee and the State Council, strengthen macroeconomic policy adjustments, unleash domestic demand potential, deepen reform and open up post-study domestic market, make sure the domestic and international markets better reinforce each other and drive steady and sound economic development. Thank you. Next question, please. Since the beginning of this year, China has actively boosted consumption, improved investment, expanded domestic demand, and advanced development of a unified national market. Based on August data, how effective had these policies been? What's your comments on this? Thank you for your question. I know you are keenly following all the policy measures. And in 2025, facing a complex and challenging development environment, local authorities and government departments have implemented the decision of the CPC Senior Committee and State Council. They intensified proactive macroeconomic policies, maintained policy continuity and stability, enhanced flexibility and foresight, and promoted steady and progressive economic development. Based on August data, policies continue to show positive effects in boosting domestic demand, improving supply, promoting economic circulation, as reflected in the following aspects. First, domestic demand expansion sustained. The third batch of trade-in policy funds was allocated, sustaining policy effectiveness and driving consumer demand. This boosted sales of related goods. In August, retail sales of household appliances, audiovisual equipment, furniture and culture and office supplies at designated enterprises maintained double-digit growth. Large-scale equipment upgrades continue to drive investment, with equipment and tool purchase investment from January to August growing 14.4% year-on-year, contributing 2.1 percentage points to total investment growth. Second, production momentum continued. Domestic demand policies translated into production growth, boosting related industries. Driven by equipment upgrades, in August, value-added output in boiler and prime mover equipment manufacturing and motor manufacturing rose 11.9% and 14.8% respectively. Outputs of equipment upgrade products like CNC machine tools and packaging equipment exceeded 10% growth. Trade-in policies spurred the production of lithium batteries for vehicles, charging stations, and electric bicycles in August, so all of them achieving double-digit growth. Third, economic circulation improved. Expanded market demand and production growth enhanced production factor circulation. In August, the logistics industry prosperity index remained in expansion. Railway freight volume growth accelerated and express railway volume grew rapidly. Regulating disorderly enterprise competition and addressing overcapacity in key industries improved supply-demand dynamics, leading to positive production price changes. In August, the PPI remained unchanged month-on-month compared to a 0.2% decline the previous month, with coal mining and processing and ferrous metals smelting and rolling prices rising 2.8% and 1.9% respectively. Fourth, growth momentum strengthened. Innovation policies advanced new quality productive forces, boosting new growth drivers. In August, value-added output in large-scale integrated circuit manufacturing and electronic materials manufacturing exceeded 20% growth. The AI Plus initiative deepened, with smart terminal products gaining popularity and the digital economy showing positive trends. Industrial robots, robot reducers, and civilian drones saw rapid growth in August. Policies aimed at stabilizing and invigorating capital markets led to active trading in Shanghai and Shenzhen stock markets in August, improving market expectation and enhancing development vitality. Thank you. Next question, please. In August, the CPI fell year-on-year, largely due to food price changes, with core CPI growth expanded for the fourth consecutive month. What's the driving factors? What's your outlook for future trends? Thank you for your question. And due to ample market supply and a high base from the previous year, the CPI in August was unchanged month-on-month and turned negative year-on-year. First, month-on-month. In August, the CPI was unchanged, compared to a 0.4% rise in July. Food prices rose 0.5%, and non-food prices fell 0.1%. In food, fresh vegetables and eggs increased 8.5% and 1.5% month-on-month, contributing 0.17 percentage points to CPI growth. Fresh fruits, aquatic products, and pork fell 2.8%, 0.9% and 0.5% respectively, reducing CPI by 0.09 percentage points. In non-food, transportation and communication prices dropped 0.3%, while clothing, household goods, services, and education, culture, and entertainment prices each fell 0.1%. Year-on-year, the CPI in August declined 0.4% year-on-year, compared to flat growth the previous month. The shift from flat to negative was mainly due to a high base from last year. In August last year, high summer temperatures and regional heavy rainfall drove up food prices, then expanding CPI growth and contributing to this year's year-on-year CPI decline. And food prices in August fell 4.3% year-on-year, with the declining widening by 2.7 percentage points from July, dragging the CPI down by 0.51 percentage points more than the prior month. Pork, fresh vegetables, and egg prices saw year-on-year declines exceeding 10%. Despite the year-on-year CPI drop due to wider food price declines, core CPI, excluding food and energy, rose 0.9%, with the increase expanding by 0.1 percentage points from the previous month, marking 4 consecutive months of growth. So, core CPI growth was driven by rising industrial consumer goods and service prices. First, industrial consumer goods prices rose faster. Since the beginning of this year, expanded trading policies and regulated enterprise competition have improved supply-demand dynamics, boosting prices. In August, non-energy industrial consumer goods prices rose 1.5% year-on-year, up 0.3 percentage points from July. Household appliances and cultural durable goods prices increased 4.6% and 2.4% respectively, contributing about 0.09 percentage points to CPI growth. Fuel-powered car prices declined, narrowed to 2.3%. Second, service prices rose steadily. Targeted consumption-boosting actions, increased summer travel, and growing demand for high-quality services drove price increases. In August, the service prices rose 0.6% year-on-year, up 0.1 percentage points, contributing about 0.23 percentage points to CPI growth. So this is a growth trajectory with stability. Medical and education service prices rose 1.6% and 1.2% respectively, while vehicle rental and tourism prices increased 0.8% and 0.7% with expanded growth. However, market supply-demand imbalances remain prominent and CPI remains low. Going forward, efforts will focus on expanding domestic demand, implementing consumption-boosting actions, increasing effective investment, advancing a unified national market, and regulating key industry capacities to promote reasonable price recovery. Thank you. Next question, please.
According to employment data in August, where do you think the current employment market stands, and how will we promote the further high-quality development of the employment market? Thank you for your question. Employment is the cornerstone of people's lives and affects millions of households. The CPC Central Committee and the State Council attach high importance to stabilizing employment. All regions and departments have implemented policies and measures to promote high quality and full employment. We've strengthened support for enterprises in absorbing labor, improved the public services, expanded job opportunities through multiple channels, and focused on employment for key demographic groups. Based on the data, in August, employment has remained generally stable, mainly in the following aspects. First, the surveyed urban unemployment rate has remained generally stable. According to the pattern of unemployment rate fluctuations, the surveyed unemployment urban rate typically experiences a seasonal increase due to graduation in July and August. As graduates gradually find jobs and enter the workforce, unemployment rate would decline. In August, the national surveyed urban unemployment rate was 5.3%, an increase of 0.1 percentage points from the previous month. This was mainly due to the entry of fresh graduates into the labor market. Compared with the same period last year, the national surveyed urban unemployment rate in August remained unchanged, indicating overall stable employment situation. Second, the unemployment rate among the core working age population remained stable. In August, the surveyed urban unemployment rate for population aged 30 to 59 was 3.9%, unchanged from both the previous month and the same period last year, indicating stable employment for this key group. Third, the unemployment rate among migrant workers declined. In August this year, the surveyed urban unemployment rate for non-local agricultural registered laborers was 4.7%, a decrease of 0.2 percentage points from the previous month. It was also lower than the national urban surveyed unemployment rate. Overall, despite complex challenges in the external environment and pressures on both the volume and structure of domestic employment, we've actively worked to strengthen employment stabilization policies, maintain general stability in employment, which was a significant achievement. Next, while recognizing favorable conditions such as stable economic growth, cultivation of new production forces, the effectiveness of employment policies, it is also essential to address structural challenges, including employment pressures in certain industries and among key groups, as well as the coexistence of employment difficulties and recruitment challenges. So further efforts will be needed to stabilize employment and the economy, strengthen vocational skills training, enhance the matching of labor supply and demand, promote high quality and full employment, improve people's lives, and ensure a healthy economic development. Next question, please. Thank you. From CNBC, I have two questions. First is also on the CPI. According to the latest data, the core CPI was the highest since February 2024. Does this mean an inflection point in terms of core CPI? Another question is on household restriction policies in major cities. What is the outlook of this industry? How does the housing market responded? And what is the future prospect of the housing market? Thank you for your question. First, your question is on the fluctuations in core CPI, and second on the housing market. First of all, the issue of inflation of prices. Well, first of all, it is quite difficult to assess if a data indicates an inflection point because there are several factors behind that. And when we see an inflection point, they often appear after a real inflection point, and it will take some time for us to identify it as an inflection point because there are several factors. And sometimes short-term fluctuations may also cover up real trends. For trends of CPI, we need further study. And since this year, overall CPI in China has maintained low. And with a number of policy support to expand domestic demand and bring prices back to a reasonable range, we are seeing some positive signs. For instance, the core CPI in August went up 0.9%, an increase of 0.1 percentage points month on month, a 4 consecutive months growth, in fact. And in terms of short-term data, we are seeing conducive factors for the CPI to grow up. First, expected growing demand as the weather is turning cooler, people are in greater need of food, And as the autumn and National Day holidays are coming up, people tend to spend more during holidays, and that will also bring the CPI up. Second, some seasonal factors. With the change of season, people may need new clothes. Thus, it may drive the prices up. And we are also entering into a new semester for students. Thus, there will be a greater need for education services. Thus, relevant prices may also go up. And the third reason is now we are cracking down on involution. Recently, according to laws and regulations, we are fighting against orderless competition among enterprises. Thus, we are seeing some price changes in relevant sectors. These production prices will also channel into the change of consumer prices, and this may also lead the CPI to go up. We are seeing adequate supply and demand domestically, yet the external energy market may have external shocks and uncertainties for the domestic market, and all these may have an impact on the change of prices. Thus, the future trends of the CPI, how it may change going forward, we will further monitor the data.
On the real estate market, this year, local authorities and government departments have implemented city-specific policies to stabilize the real estate market, introducing measures to halt its decline and promote demand for essential and upgraded housing in the first 8 months. Despite fluctuations from domestic and international factors, the decline in home sales and prices narrowed, and destocking progressed. The real estate market is moving toward stabilization. Recent policy adjustments in some cities are showing effects with improved market transactions. Key features of the real estate market in the first 8 months include: first, narrowing decline in sales. Policies supporting essential and upgraded housing demand reduced the decline in home sales. From January to August, new commercial housing sales areas fell 4.7% year-on-year, with the decline narrowing by 13.3 percentage points from July last year and 8.2 percentage points from 2024. Sales value dropped 7.3%, with the decline narrowing by 16.3 percentage points from August last year and 9.8 percentage points from 2024. Some first and second-tier cities saw growth in new home sales area and value. Second, narrowing price declines. In August, most of the 70 large and medium-sized cities saw smaller year-on-year declines in commercial housing prices. New home prices declines in first, second, and third-tier cities narrowed by 0.2, 0.4, and 0.5 percentage points, respectively, from the previous month. Second-hand home price declines in second and third-tier cities each narrowed by 0.4 percentage points. Third, improved funding and inventory. Destocking advanced steadily, improving enterprise funding and inventory conditions. From January to August, real estate developers' funds received fell 8%, with the decline narrowing by 12.2 percentage points from August last year and 9 percentage points from 2024. By the end of August, unsold commercial housing inventory decreased by 3.17 million square meters from the end of July, declining for 6 consecutive months. However, home sales continue to decline and market recovery takes time. Further efforts are needed to stabilize the real estate market. Moving forward, we will well implement the decisions of the CPC Central Committee and the State Council, follow the guiding principles laid out at the Central Urban Work Conference, advance high-quality urban renewal, build a new real estate development model, increase high-quality housing supply, meet essential and upgraded housing demand, and promote stable and sound market development. Thank you. Next question, please.
The CPI has stopped its decline consecutive decline for several months. What are the main reasons behind this, and how is the PPI expected to perform going forward? Thank you for your question. Driven by the effective implementation of macroeconomic policies, the advancement of a unified national market, the optimization of enterprise competition, and the rapid growth of new drivers, the month-on-month PPI has turned from decline to stability within the year-on decline narrowing. In August, the year-on-year PPI declined by 2.9%, with a decline narrowing by 0.7 percentage points compared to the previous month. The month-on-month change was flat, while the previous month saw a month-on-month decline of 0.2%. The narrowing of the PPI are mainly because of the following factors. First, market competition has been optimized. Recent efforts by relevant departments to promote industry self-discipline, combat orderless competition, and advance capacity governance in key industries have gradually showed results. In August, the ex-factory prices of coal processing, ferrous metal smelting and processing, and coal mining and washing industries narrowed by 3.2 to 10.3 percentage points compared to the previous month. The year-on-year decline in prices for photovoltaic equipment and component manufacturing, as well as new energy vehicle manufacturing, narrowed by 2.8 to 0.6 percentage points. The combined impact of these in 5 industries on the year-on-year PPI declined by approximately 0.5 percentage points. Second, demand from emerging industries has strengthened as China's economic structure steadily adjusts. Industrial upgrading toward high-end and intelligent development has improved. Market demand has steadily expanded. In August, the year-on-year prices of integrated circuit packaging and testing manufacturing increased by 1.1%, while the price of ship and related equipment manufacturing rose by 0.9%. The rapid development of AI applications has made smart products increasingly popular, further driving prices. In August, the year-on-year prices of wearable smart devices increased by 1.6%. Third, the effect of consumption stimulation policies have become apparent. Since the beginning of this year, the implementation of initiatives to boost consumption has expanded demand for consumer goods, leading to year-on-year price increases in some industries. In August, the prices of products such as arts, crafts, and ritual products went up 13% year-on-year, and the price of sports manufacturing went up 4.7%. The prices of specialized sports equipment and accessories went up 0.4%. The prices of nutritional food manufacturing rose by 0.9%, and the prices of house food manufacturing increased by 0.3%. Yet it is important to note that the current PPI remains in decline, which is not conducive to the improvement of industrial enterprises' operations. Thus, next, it will be necessary to further expand domestic demand, deepen the building of a unified national market, and standardize enterprise competition. Next question, please. Thank you. From Bloomberg. How do you see the consumption prices in August, and how has relevant consumption policies reflected on the performance of consumption? I know consumption is of high importance to many, and since this year, we've implemented a number of decisions made by the CPC Central Committee and the State Council. We've taken a number of pro-consumption policies. The overall performance and policy effects have further promoted the growth of consumption, increased its market and structure. From the beginning of this year to August, we saw steady growth in a number of key areas, and we're seeing steady growth. In August, we saw the main following characteristics. First, steady growth in goods consumption, driven by the National Trading Program for Consumer Goods and Household Consumption Upgrading. We saw goods consumption continue to expand. In August, retail sales of goods grew by 3.6% year-on-year, a generally stable momentum. The trading policy supported strong sales growth in related categories. For instance, in August, retail sales of household appliances, audiovisual equipment, cultural and office goods, and furniture from large enterprises all achieved double-digit year-on-year growth, significantly outpacing the overall growth rate of goods retail sales. Meanwhile, as people's lives are getting better, we have a higher demand for premium products. Thus, retail sales of sports and recreation products are growing up. And the production for gold and the consumption for gold, silver, and jewelry also went up 16.9% and 16.8% year-on-year, further contributing to the growth of goods consumption. Second, stable expansion in services consumption. Summer travel, tourism, and leisure demand drove sustained rapid growth in the service consumption. From January to August, service retail sales grew by 5.1% year-on-year, faster than the growth of goods retail sales. Integrated consumption scenarios such as Tourism Plus and Sports Plus were further developed. High-quality service supply continued to increase. Retail sales for tourism, consulting and leasing services, transportation services, cultural and recreational services, and communication and information services maintained double-digit growth. In August, the national box office revenue and movie attendance also went up 48.6% and 66.9% year-on-year. Third, positive development of new consumption models. As digital technologies deepen their integration with new consumption scenarios, online and new consumption models showed positive trends. From January to August, national online retail sales grew by 9.6% year-on-year, faster than the growth of total retail sales of consumer products. Online retail sales of physical goods went up 6.4% year-on-year, accelerating by 0.1 percentage points compared to the previous period. Emerging areas such as digital consumption, green consumption, and house consumption are increasingly mature, and they're becoming new growth drivers. Retail sales of new energy vehicles maintained rapid growth, with the national retail sales of passenger new energy vehicles grow by over 20% in August. Overall, supported by various pro-consumption policies, goods consumption in August remained generally stable. Services consumption demonstrated resilience. New consumption models continue to expand, and market space is still growing. The trend of consumption expansion remains unchanged. That said, it is important to note that people's consumption capacity and confidence still need improvement. We still need stronger internal drivers. Thus, next, efforts will be made to further implement the action plan for consumption upgrading, for stabilizing employment, and for increasing incomes to further improve the consumption environment, enhance high-quality supply, better unleash the consumption potential, and promote the sustained development of the consumption market. Next question, please. With Reuters, from both the numbers in July and August, what are the expectations for the economic growth in Q3? I know recently we are seeing anti-involution policies, and how would this policy affect the prices? Are there any results yet? Thank you for your question. I know it is a question on many people's mind. From the data in July and August, with a number of macroeconomic policies, we are seeing relatively fast growth in industrial and service sectors. The consumption and import and exports are growing. Employment and prices are generally stable. We are also growing more high-quality productive forces, and the Chinese economy has sustained its development while maintaining stability. On production, we are seeing relatively rapid growth in terms of industries and services sector. In July and August, large-scale industries saw their added value grow up by 5.7% and 5.2%, maintaining a relatively rapid growth of above 5%. The services production index went up 5.8% and 5.6% over the past 2 months, faster than the growth of industries. On demand, market sales and imports and exports continue to expand. In July and August, the total retail sales of consumption goods and retail sales of goods went up 3.7% and 3.4%. In the first 8 months, the retail sales of services went up 5.1%, faster than the growth of retail sales of goods. The export of goods went up 8.0% and 4.8% over the last 2 months, further expanding in scope. Unemployment rate maintained stable. Over the past 2 months, the surveyed unemployment rate in urban areas saw a seasonal rise, but they are about the same level compared with the same period last year. And for working forces aged 30 to 59, the surveyed unemployment urban rate was 3.9%, overall stable. And on prices, our core CPI has gone up. In July and August, core CPI went up 0.8 and 0.9%, a 4-month consecutive increase. On drivers for development, new quality productive forces are growing over the last 2 months. The added value of high-tech manufacturing of large enterprises went up 9.3%, significantly higher than the increase of large enterprises. The production of industrial robots, of new energy vehicles have maintained a double-digit growth. We are deepening our digitalization and green transition. For instance, the production of digital products, online retail sales of physical goods continue to go up. At the same time, we're also further opening up. We are diversifying our trade. We are also increasing and exporting more with BRI countries. We are also further ensuring people's livelihood, investing in enhancing people's lives. So overall, with the synergy of a number of macro policies, the economy in Q3 will continue to maintain stability while showing progress. As of the anti-involution on prices, recently, various departments have urged industries to impose self-discipline to fight against orderless competition, and we are seeing results. For mining, for coal, for new energy vehicles and photovoltaic sectors, the production prices of these industries are narrowing. And thus, the PPI has leveled off against a drop last month, which will further stabilize prices. Next question, please. Thank you.
Private investment remains quite lackluster and continue to decline from January to August. What's your comments? What are the future prospects for private investment? Thank you for your question. Private investment is an important part of fixed asset investment and a vital force in advancing investment quality and efficiency. This year, affected by global changes and real estate market adjustments, private investment slowed. But excluding real estate, private project investment remained stable. With policies supporting private economic development and investing taking effect, the environment for private enterprises is improving. This will support the growth of private investment. From January to August, private investment showed these features. First, stable project investment growth. Real estate development accounts for a significant share of private investment. From January to August, due to a 16.7% decline in real estate investment, overall private fixed asset investment fell 2.3% in August, with real estate dragging down growth by 4.5 percentage points. Excluding real estate, private project investment grew 3%, outpacing total investment. Second, strong manufacturing investment growth. Large-scale equipment upgrade policies and economic transformation drove private manufacturing investment. From January to August, it grew 4.2%, surpassing private project investment by 1.2 percentage points and accounting for 40.6% of total private investment, up by 1.7 and 2.6 percentage points from mid-year and last year respectively. Of 31 major manufacturing sectors, 16 saw double-digit private investment growth, with automobile and railway, ship, aerospace, and transport equipment manufacturing rise 22.6 and 16.2% respectively. Third, increased innovation investment. Private enterprises key to innovation boosted investment in emerging and future industries. As a result, from January to August, private investment in information services grew 26.7%, in professional technical services by 17.6%, supporting industrial upgrades. Fourth, expanding investment opportunities. With reforms from the third plenary session of the 20th CPC Central Committee taking effect, mechanisms for private enterprise participation in major national projects are improving. In the year until August, private infrastructure investment grew 7.5%, outpacing total infrastructure investment. And this 7.5% is higher than the total infrastructure investment of 5.5 percentage points, with electricity, gas, and water supply investment rising 23.5%. And private investment in accommodation, catering, culture, sports, and entertainment grew 17% and 7% respectively. Despite complex global and domestic challenges and operational difficulties for some private enterprises, the overall outlook for private investment is positive with strong underpinning. First, high-quality development creates opportunities. Private enterprises drive innovation and high-quality development. Their focus on green industries like new energy vehicles, photovoltaics, and lithium batteries, and future industries like AI and embodied robotics will expand investment opportunities. Second, strong resilience and adaptability of private enterprises. Private enterprises are agile, market-sensitive, and resilient. And they are highly adaptive and flexible as well. This year, they navigated external shocks, expanded markets, and stabilized production, demonstrating strong vitality and innovation. Third, robust policy support. The Private Economy Promotion Law signals strong support for private enterprises. All the local authorities and government departments are improving mechanisms to leverage government investment that will be conducive for further social investment, optimizing market access, and enhancing funding and resource support. In the interest of time, last question, please.
From economic data in the first 8 months, how do you see China's economy going forward? What are the expectations? Thank you for your question. Since this year, we've seen a complex and changing international environment. We're seeing greater adverse impact from the external environment. We saw effective demand relatively weak domestically, and deep-seated problems are showing. That said, with the sustained support coming from macro policies, with the building of a unified national market, the Chinese economy has sustained a pressure and made progress while maintaining stability. Over the past 8 months, we saw generally stable indexes, and we are making steady progress towards high-quality development. Going forward, the underpinnings and the overall trend of a good long-term economic growth remains unchanged. Macro policies are showing their results. We will continue our reform and opening up. The dual circulation is getting more smoother, all of which will support the sustained and positive growth of the economy. First, continued unleash of consumption potential. With a number of pro-consumption policies, sales are growing. The production of products under the trade-in policy, live stream shopping, on-demand retail, all these are going up. Services consumption are also expanding. For instance, holiday trips, tourism, sports, movie, and performance industries are all active. Thus, going forward, as the pro-consumption policies will further be implemented, the old for new exchange policy will continue to be implemented. And as we roll out a number of livelihood policies, including childcare subsidies and free preschooling, it will also boost the capacity and will of the residents. As the autumn and National Day holidays are going up, people will have more willingness to spend, and consumption is expected to grow. Second, stronger new growth drivers. The innovation is being better applied to the development of science and technology. We are seeing growing new drivers. Thus, our economy are showing new growth drivers. In the first 8 months, the added value of high-tech manufacturing of large industries went up 9.5% year-on-year, of which the added value of the building of integrated circuit, aerospace, and relevant equipment went up 22.3% and 14.6% respectively. Over the past 8 months, the production of robotics and civilian drones went up 29.9% and 53.7%. The output of new energy vehicles went up 31.4%. We are also seeing accelerated growth in terms of green consumption and the new type of consumption. For instance, online retailing and on-demand retailing. All these have driven up the growth of physical goods. Next, as more potential will be unleashed in these emerging areas, it will further expand the room for economic growth and promote old drivers to turn into new drivers. Third, the growing market vitality. As we further build a unified national market, further enhance the dual circulation, boost the domestic and foreign trade, further opening up, all these will further enhance market vitality. Over the past 8 months, the revenue of large-scale manufacturing industries went up 4.8%. The imports and exports of the private sector over the past 8 months went up 7.4%. And in August, the PMI and the Business Activity Expectations Index for Manufacturing and Services Index went up 53.7% and 57%, all up compared to the last month. Thus, going forward, we will continue to fight against orderless competition within laws and regulations, further roll out high-quality pilot zones for free trade to further enhance the vitality of market entities. Fourth, stronger macro policy support. Since this year, various departments and regions have earnestly implemented decisions of the CPC Central Committee and the State Council. All these have promoted the sound development of the economy. The 2 major initiatives and the 2 renewal initiatives are showing good results. Over the past 8 months, the trade in services has helped home appliances, audio-video equipment, telecommunication equipment to soar and increase in their retails, up by 28.4% and 21.1% respectively. Going forward, we will adopt more active fiscal policy and moderately easy monetary policy to further ensure the sustained growth of the economy. Overall, despite a complex and serious external environment, despite the challenges we still face for our domestic economy, but our economy still enjoys a sound foundation, good advantages, strong resilience, and huge potential, and the underpinnings are good for the further growth of the economy, in particular with stronger new growth drivers, more vitality of the market. We expect the economy to continue to sustain its good growth and progress. Thank you. This is the end of today's press conference. Thank you, Mr. Fu, and thank you all for coming. Thank you.